In today's show, I'm receiving Robert Höglund, one of the top experts in carbon dioxide removal, or CDR. He manages the Milkywire Climate Transformation Fund and co-founded the CDR market overview, CDR.fyi. This discussion is perfect for those who are just getting started or want to explore the state of CDR in more depth. We cover the various forms of CDR technology, which one is ahead of the game today, and why that might change soon, the role of governments in driving the industry, price predictions of the carbon price, the impact of oil and gas and whether they are hindering progress, and we discuss how providing more data through platforms like CDR.fyi and spicing up the industry through competitions like the XPrize challenge can break that glass ceiling for CDR and truly accelerate its growth. Let's go. All right, so Robert, it's great to have you in Climate Insiders. Welcome.
Thanks. Good to be here.
All right, so how would your best friend finish the sentence? Robert is ...
Curious person trying to solve difficult problems. Currently in climate. Yeah.
Well, we're going to talk a lot about climate and specifically with carbon removal and CDR. And we're going to use this opportunity to have one of you, one of the leading experts in that field, at least in Europe, to answer all the hot questions that I'm, dying to ask, from an investor lens, but also entrepreneur lens. And let's start spiky, because this is quite timely. Why did you decide to attend COP28, deemed as the big oil conference?
Yeah, I mean, some people are boycotting, but I think they're still in the minority. The COP meetings are the best avenue for getting international progress. It's not that I'm going to negotiate for a country, but it's a great opportunity to meet a lot of other people and make progress on climate. I don't think that me participating sort of helps the oil industry or helps oil countries in any way. I don't make that analysis.
What could realistically be achieved, though? Do you have hopes?
In terms of the negotiations, what they're going to lead to, I'm not the expert to answer how influential this COP will be. I mean, we'll certainly make progress on the loss and damage fund, for example, and the global stock take in countries updating their targets. And I mean, it is incremental progress. So if you go back to Paris, you could see what world were we heading towards with the climate targets where we had then. Then it was closer to 3 degrees. Now, if all countries reach the targets that they have set, we're going to reach 1.8 degrees or so. So it's actually a huge progress in terms of targets. And a lot of countries are also making progress in reducing their emissions, even though on a global level, emissions are not reduced. It's still increasing. But if you look at countries like the US and the European Union and also like the United Kingdom, for example, that have quite ambitious targets and have started to reduce their emissions and then sort of are on a path that there's a lot of progress happening. And you also see targets being sharpened, not the other way around. Although, of course, it could be backtracked on that side as well. But yeah, I am kind of optimistic in one way, right? So we're not going to reach the 1.5 degree target. It seems very unlikely, but things are still looking brighter than they did, I would say.
Yeah, we're technically already past the 1.5. I mean, you just have to read the IPCC reports, year on, year out, and you know that it's not trending so well. But hopefully we have a ecosystem called the CDR ecosystem that can solve us. Or at least, actually, one of the biggest arguments against the carbon removal community is the concern that funding carbon removal is distracting us from actually reducing emissions. In other words, and you've spoken about this, we continue polluting and emitting like crazy. And because we can remove afterwards, we can clean our hands. This is known as the mitigation deterrence or, moral hazard. What do you generally say to this? If you were kind of to compact...
No, it could for sure. And I wrote a paper with Carbon Gap and then Eli Mitchell-Larsen and Sylvain Lorenz just a couple of months back on sort of how to counter mitigation deterrence. And it's entirely possible, but there's things that we can do. So it's also important to remember that this goes for a lot of things. So you could also use, let's say the new drug Ozempic that helps people lose weight, that could be used to, people have a very unhealthy lifestyle for decades because they know they can use the drug. But it's not an argument against the drug, like you shouldn't use it or that you should discontinue the drug or something like that. It's just an argument that, you should have better plans than that. And then the same for carbon removal, things like only using like-for-like removal. So if you have fossil emissions, you would need to permanently remove that to make a sort of net zero claim and say that you're not having a continued effect on warming. And also in the short to medium term, have separate targets so that you, when you deploy carbon removal, don't distract from the emission reductions. And also don't count on a huge amount of carbon removal to be cheap and readily available later on. You should sort of count on that it will be expensive and quite limited, and sort of plan accordingly, basically.
Yeah, and there's also the difference between, I wanted to plant that seed right off the bat, the difference between CDR and carbon capture. It confuses the hell out of everyone, right? Those two words, removing versus capturing, because technically if you remove carbon, you somewhat capture it, to do something with it. So could you kind of try to clear things out, the floor, and tell why those two things are different?
Yeah, the wording doesn't imply they're different, but they have different meaning right now. So carbon capture is when you take CO2 from a fossil source like cement production, like a coal power plant, like iron production, and you capture that CO2 that came from a fossil source or like a non-natural source, and you capture it and store it or use it in some way. Whereas carbon removal is you take that CO2 from the atmosphere, so you're reducing the CO2 level in the atmosphere, or relatively reducing it at least, and then storing it in a durable way. So anthropogenically, like done by humans, taking CO2 out of the atmosphere and durably storing it is basically the definition of carbon removal.
Right, and one part of the carbon capture or subsegment is the DAC, the direct air capture. That has excited a lot of investors, VCs, the media over the last couple of years. What needs to happen for DAC to turn into a real scalable solution and reach gigaton scale carbon removal?
We need to deploy it at some meaningful scale for the technology development to get kickstarted, and we can start to bring costs down. So most DAC approaches have been existing in the lab or in like a very small first of a kind application. So Climeworks had 4,000 tons per year plant. Now Heirloom has a 1,000 year with a very different technology plant. And there's many companies that will deploy kind of those sizes, maybe even smaller, getting out of the lab and actually trying it in the real world. And even though you can make a lot of progress kind of more in the lab and with the kind of basic research, you have to do it at some meaningful scale. And others are planning to do it on a megaton scale. Carbon engineering's technology being used for a 500,000 tons and plant. And also Climeworks and Heirloom is probably going to do the 1 million ton plant with the DAC hubs. So once you get to that kind of scale, you see much easier what needs to be done. Also, to reduce costs and to see if it's viable or not. So start doing it, and at the same time also find alternative ways, because we're still coming up with a lot of new ideas. So I work with Milkywire and the Climate Transformation Fund, where we also, companies donate to the fund and we support solutions, kind of like a little bit altruistic buyer of carbon removal. So like Klarna and Spotify and others are donating to this fund, and we supported, I think it was 8 carbon removal solutions last year, being the first buyer of most of them, and many of those were new direct air capture ideas. So testing, like all of them have their own version of like what they're doing. So there's a lot of new basic ideas to be tried out.
All right, and so I see a lot of, from a neutral stance, right, a lot of a CDR camp pointing the finger at DAC saying that's completely unrealistic. There's no unit economics. And then the DAC guys saying, well, we just need that missing brick in that climate wall, which is cheap energy generation, for that to be real. And then as soon as we hit that threshold, it's going to go ballistic, right? We're going to see DAC projects popping front and center. You support, you're neutral here, you support both type of projects.
Yeah, we need a portfolio approach. Like all carbon removal solutions hit some kind of, if not wall, then at least like an uphill battle after a while. There's only so much waste biomass you can use for biochar or biomass burial. And there's only so much space in the ocean for like macroalgae, etc. Enhanced rock weathering. You need to open new mines and get a lot of rock and grind it up. And it becomes more difficult at some scale. And that's why we also need a portfolio and do a lot of different methods, and that might suit also different geographies better. So like in the desert, you might be able to get very, very cheap solar power, and maybe in the north of Canada or Greenland, you might have very, very cheap wind power. And direct air capture can make a lot of sense in those conditions, especially if it works well with intermittent energy. And in those cases, it could be like the absolutely best thing to do in those geographies. And another thing with DAC and other solutions that get a pure stream of CO2 is that that can also be used for other things. So like, fuels or plastics, and we can get more into that, but there's that benefit of those solutions as well.
Yeah, so it's important that you take a portfolio approach. You mentioned a whole bunch of them. Is there one that really stands out today? If we would take a snapshot of one that's demonstrated scale and all the benefits of long-term carbon removal, so the permanence, is there one technology that stands out today?
No, like you can look at it from different ways, and you can say that, well, biochar is dominating deliveries right now, because that's the thing that you could quickly and easily do and sort of scale up without having to have very long cycles. So that's dominating. But Peter Olivier, he works at Undo Carbon, but has been working with biochar before. It's a great follow in the CDR space. He wrote a funny tweet today that saying like, well, in 2020s, biochar, the 85% biochar CDR market, and then in 2030, it's the 20 the dominated by enhanced rock weathering, and then the 2040s, the CDR market dominated by ocean alkalinity enhancement. Like, they might switch, right? Like, just because biochar is the leader now, it doesn't have to be in 10 years. And if enhanced rock weathering becomes the leader, it might also be surpassed, right? So it's something that's going to shift, and we'll know a lot more when we do it at scale and see what is, most feasible in terms of cost, but also other things.
What makes biochar the winner today? Is it just the fact that it's pyrolysis and fairly easy, low entry, barrier to entry, energy efficiency? What makes it the winner today, or just a critical size, right, of projects that have been able to deliver on it?
Yeah, it's not that difficult to make. Right, you can make it yourself even, or like an artisanal scale, or you could buy a pyrolysis unit. It's a technology that already exists. You could buy it from Alibaba, basically, like a more another developer in Europe, etc. has kind of more expensive machines and get started, right? And there was a lot of companies that were making biochar already before that sort of were scaling up their operations to sell carbon removal credits as well.
As far as I know, there's a shortage, right, on suppliers of those machines, and they cannot reach scale, fully. And running those machines, it's a difficulty.
You came up to some leader position, but then, I think that there's a backlog now. It takes 18 months, I heard. I don't know if it's true, to get a pyrolysis unit. So, the initial burst in biochar might not be continued in the same growth trajectory because of supply chain issues. And that's another interesting thing. Like, money is not the only limiting factor for carbon removal, although it's very important. Like, you would run into a lot of other issues as well.
And let's use, since we're talking about biochar, we can come back and backpedal a bit on the other sets of technologies. Biochar claims to have permanence, not just short-term permanence, but permanence, period. What does that mean? How can carbon be permanently trapped anyways?
There's some difference in the word how permanent is used. So if you're talking about permanent, then it means forever. Then it's very, very high bar, right? Then if you talk about permanence and degrees of permanence, it gets a little bit more kind of, what are you talking about? Durability might be a better word, like the high durability and kind of low durability, and what's the expected lifetime of the carbon storage. So biochar, the best understanding from the sort of meta studies, etc., is more that it is degrading and being lost back to the atmosphere after some time. But for example, the best available knowledge was that under average conditions, you would lose 20% after 100 years and 50% after 500 years. But there's also new science pointing to that it might actually be that 80% is essentially permanent. But there's a need for more knowledge on that. But it looks like it's going to be at least hundreds of years while you have that degrading, or more. Right, or maybe it's actually this 80% permanent, but there's more studies coming up.
As opposed to replanting forests, which has very low permanence. We know that it's just a temporary win, and then it degrades very quickly.
Well, it has a risk reversal. Like, forests can stand for thousands of years as well. So, I mean, they're not necessarily temporary. They're not inherently temporary. Like, there's a difference between things that are inherently temporary, like where you just wait 10 years with cutting down your forest and then say that that's stored, or you put some biomass, just dig down biomass, and it's not like just in the topsoil. It degrades over 10 years or so. That's like inherently temporary. And then you have things that have just a high risk of reversal, but it could stay forever, basically.
And so awesome. Thanks for the difference, permanence, durability. And another set of technology that is very promising is But there's all sorts. There's enhanced weathering, rocks using, and the problem of this is feedstock, right? So the amount of mines, and you're talking about mines, so we need to reopen mines to basically source the feedstock and then maybe crush the rocks or use all sorts of methodologies to can this reach scale? Or is the emissions that are happening in the process of exploiting the mine going to counterbalance, or we're almost kind of letting the genie out of the bottle and not fully in control of what could happen afterwards?
No, it can definitely reach scale. So it's more a question of like, where would you want to open mines? Where does it make sense? And how far can you transport it? Because once you have to transport it very long, especially with road traffic, then the economics and also the emissions, if you use fossil transportation, starts to get bad. But it's not, even with today's technology in mining and transportation, it's still just a small part of that LCA, the actual emissions in the process. And when you get kind of more electrified everything, then the emissions become very, very, very small part. And it's definitely scalable. Like, it's more now enhanced rock weathering is figuring out how to do the measurement in a way that is secure and actually know what's happening and might differ in different places, and how can you really say how much is removed and how fast, etc. And that's being worked on by a lot of different companies and scientists, and we're getting closer and closer to understanding that. So it's still not on a level where you just say like, okay, let's just go, let's just deploy as much rock as we can. It's more in the place where we're exploring and testing it and learning more, but gearing up for future scale. Yeah.
There's also, I had a conversation with an investor friend, and he was describing the climate tech as a sort of series of miracles. It's a bit of a dominoes effect of miracles, and one of the holy grails, I guess, in the climate tech space is cheap unlimited energy forever, aka nuclear fusion. That would be that domino that kicks in the CDR dominoes at an accelerated rate. Do you see a lot of projects that are just dependent on that brick, the technological brick to unveil, be it fusion or SMRs, so the small modular fission reactors, or even hydrogen, or other sorts of cheap energy to be the turning point for the CDR industry?
Yeah, cheap energy is, I think, the turning point for a lot of climate tech, right? Like also alternative fuels and so many different things that just get so much easier if you have very cheap energy. Then that's the number one thing probably that you need to achieve to get to solve climate change faster, right? Like, and it goes for CDR as well. And yeah, I think the fusion, maybe, but even if the fuel is basically free, it might still cost a lot in a lot of other things. So I don't know about the cost projections, but look at DAC, for example. A lot of DAC approaches need some level of heat and could be actually quite good to pair with nuclear. So if you're going to do direct DAC capture at scale, you might build nuclear plants just for DAC, like purposely built nuclear plant that's not even delivering to the grid, or like, just running DAC plants 24/7, huge nuclear plants, right? That's what we're going to look at. And for direct air capture, also you need a purposely built energy, because you can't just take it from the grid where it's replacing fossil fuels. So scaling DAC also means scaling energy for sure.
And so that takes us to the price question, which is, how do you finance a project like this that builds up a nuclear plant just to proceed with DAC so that you can sell your carbon credits or whatever you extract on the market? Yeah, no, so let's talk about price for a minute. Today it's hyper volatile, right? If you take the matrix of the carbon market, it oscillates from $100 to $4,000 as for direct air capture. Climeworks. Who sets those prices anyways? It's extremely confusing for both the startup entrepreneurs that are trying to start a project and say, well, it's so volatile, I can also speculate. Also the investors that are running an assessment and trying to build financial projections. So what do you say to them? How do you set your price?
It's not price as much as cost, and it's not really volatile. It's just that different approaches are at different stages. There was an artwork that I saw in in a sort of art hall many years ago where an artist had made like a power drilling machine, like by himself, by hand. Like he made all the steps and documented it, and then he put like a receipt next to it with everything that he'd done and all the hours and the material. And I think it costs, like $30,000 or something, that with a normal average salary, basically. And then he went to the store and bought like one for $15 and hung next to it with the receipt. And the little bit same with like, yeah, of course, DAC is going to cost like $2,000 per ton when you basically build your own drilling machine like from scratch and there's a prototype. And that's what the companies are paying. They're paying you with these early wires. Like they're paying for the prototype. They're paying for that first of a kind power drill. Basically, that's not price. Like it's not, doesn't mean there's a market for power drills at like $30,000 a piece. Like just because someone was maybe willing to finance a prototype. And the same with DAC. So, I mean, you should see it as a proto market where there's some altruistic buyers, basically, that, or some are maybe not altruistic, but still want to contribute very early on to kickstart the industry, and are willing to basically pay the cost of developing it very early on. But that's very different from kind of what a market at scale, at what kind of willingness to pay there are at scale. That's a completely different thing.
That's interesting what you're saying, that it's altruism is the excitement that they get about one particular set of technologies that dictates their willingness to pay a certain price. So you're saying that DAC seems more appealing, more sexy, more futuristic, so they were willing to pay a super premium versus biochar, for example.
Not really. It's just that biochar doesn't cost that today. It costs only $150 per ton. So that's what you pay. And the prototype for a DAC costs much more. So that's what you pay. You pay what it costs. Like it's not that you're valuing DAC more. It's just that it costs more, basically, right?
Yeah. And so let's kind of play a game of price predictions. It's very difficult. Everyone say that if we set that price, the CDR market will explode. And Microsoft also claimed that the carbon voluntary market would go down to $100 a ton. So kind of everyone is going with their own price predictions. Do you have your own intuition here? How is this going to evolve in the next short term, midterm, long term?
I think it certainly is possible for a lot of methods to deliver in the $100 to $200 ton sort of bracket at scale and a little bit further down the road. So I would expect permanent or very durable carbon removal to be in that kind of $100 to $200 like post 2030. Maybe a little bit higher in the beginning, but then maybe a little bit lower at the end. I don't think below $100 for most methods is going to be very, possible. But things like biomass burial might be, significantly cheaper. And then it's interesting what happens. Are they just making a great profit, or like how's the market dynamics going to work? Is no one going to buy DAC, and everyone's just going to do biomass removal first? That's going to be interesting to see.
And from a regulatory perspective, are you advising the regulators to set a certain price or a bracket?
No, I don't think the regulators are not setting the price, right? Currently, what regulators, or let's say governments instead, are doing, on the one hand, doing things like the US with a 45Q, where there is a incentive being paid, which is less than the cost today. It's $180 for direct air capture. And then they're doing direct procurement a bit, and then you basically pay the cost. And Sweden and Denmark is also doing kind of reverse auctioning with BECS and paying part of the cost. So it's not really governments that set the price. And if carbon removal is included in the European trading system and other cap and trade systems, it's also more kind of the market and the actual cost that would set the price, and also what the alternative is.
So since we're talking about regulations, let's talk about politics. Why do this seem so ineffective? And what are the main asks of the CDR community to make it a bit more effective?
I'm not so sure policy is ineffective as more as non-existent in many cases, right? So it's not that they introduced a lot of bad policies on carbon removal or anything like that. Not yet, at least. Might have that kind of criticism later on. The US is doing a lot, and I think if other countries were to copy the kind of measures, maybe not straight, but kind of in terms of scale and relative scale that the US have done for carbon removal, I think that would be on the kind of order of magnitude that would be be needed. So they have the 45Q in kind of direct support. They have direct air capture hubs where the government goes in and pays a large part of that. And going back to the question, who will pay for nuclear like that? Of course, you're not going to build a huge nuclear power plant just because you hope there's a market for your direct air capture tons, right? Government needs to be involved, either directly financing it or mandating a market for, you have to buy carbon removal for your last 10% or something, so you know that actually is a market. So those kind of things, if that happens on a broader scale, to go from the extremely small, I think a really core message is that you can't go from like a few 100,000 tons removed to a few billion tons removed in less than a few decades. Like, you just can't do it. Like, you need permits, you need land, you need supply chains to be built up, you need people to be trained. Like, the growth rate of the industry can't be like thousands of % per year. Like it's just not possible. So that's why we have to start now. It shouldn't be like a priority of governments compared to other things, but it should be one thing. Just like governments are giving support to hydrogen or geothermal, so like other technologies like CDR also needs support.
And it's interesting that you're looking at a few decades. A few decades could be very, very long, right? So definitely taking us past the 2050, where we're supposed to rock bottom or at least go to net zero. And one thing that keeps coming up is the role of oil and gas. Oil and gas, as an entire industry, they have the infrastructure, they have the know-how, they have the role to play. They could issue their permits. They have access to those regions where there's a lot of emissions being produced. What is, in your opinion, the role that they have to play? And as we were talking about COP28, a lot of people are saying that it's a travesty. They're using the CDR space as just a little bit of R&D pocket money to cover up the continuation of the extraction that they're doing. What do you say to that?
So CDR can definitely be used in that way. And you could criticize companies, and you should criticize companies if they're doing that. What you need to ask them for is more like, what's your plan? Like, are you planning to continue with oil production at today's level? Or like, then CDR is not going to cut it. You can't just offset 100% of your oil emission. The problem is on a company level, like they might all claim to be, well, we're going to produce the last 10% of oil. Like everyone says that. And then it's like, yeah, there is a role for oil, even at net zero. There are certain applications it might actually be the best use for aviation, for example, and you use permanent carbon removal. Electrofuels is way more expensive than offsetting with permanent carbon removal, for example. It might change with new technology, but and then there are other things where there's a small role for oil. But every company could be claiming that we're gonna have that small role, and all the others can go out of business because we have like in Norway they might say like we have the lowest emission intensity of producing oil, or like Saudi Arabia might say like, well, we are the cheapest oil, so we're going to be the last man standing, etc. So I think that's very difficult, and it's also difficult, like this is outside my expertise in the kind of geopolitics and how to advise companies in the oil sector, but it's interesting to see like what are they doing. They're not investing in renewable energy, but also maybe for some they think it's outside of their expertise. There are others that are much better at building a renewable energy company, so they prefer to try to be the last man standing, or maybe do stock buybacks and sort of slowly dismantle themselves and giving the money back to the shareholders. Is that wrong? Like, depends on what the shareholders do with the money. It's interesting. It's kind of complicated actually, and also shows why there's a need for regulation, like a carbon take-back obligation. Like saying that if you're going to continue selling oil, not just producing, but the one that's selling it, so it doesn't matter if it comes from another country, then you have to store part of that permanently and sort of start with maybe 1% and then go all the way to 100%. It doesn't solve everything, like in terms of, you could still be some mitigation deterrents, but I think in terms of like compromises and what might work, I think a carbon take-back obligation where you say that, well, start with 1% and then 100% is going to be permanently removed by 2050 is a great way of actually having boundaries for the oil industry as well.
Are you personally working with oil and gas?
No, I'm not working with any oil or gas company. I mean, I've talked to oil companies for sure, talked about carbon removal technologies, etc. But I don't have any current customer or anything like that. That's oil company.
And one of I see the intertwining, right, of fossil fuels, the big oil, and governments as one of the biggest hindering factors. I mean, we were saying with COP28, where the incentives are not really aligned to lay out very ambitious regulations. We're starting to see it with the CDR space, right, where they try to get a bit of ownership. They get on the tech cap table of those companies to keep an eye on what's happening, but there's no real alignment on whether they really want to press the gas pedal to scale those technologies. And I see that as the CDR ecosystem is at the mercy of big oil on prices, regulations, permits. What can we do about it, if anything?
Well, its policies is the final solution, right? Like things like the carbon taper obligation is saying like, well, we're going to phase out oil production in this country, or it's going to be 100% removed, basically. Like that's kind of the things that's needed. Of individual companies, I don't think they can be sort of trusted to give up their whole business or like expected to. It's going to be very difficult. The CDR industry, I mean, you should be careful, especially on communications, and never. There's a lot of things that could go wrong, and you should never give this sort of impression that the oil industry at today's scale could or anywhere close to today's scale could be continued, right? We need, and this is an interesting distinction. It's also important to say that we need to phase like out fossil fuels. Save maybe over a small part. It's not just reducing emissions. We actually also need. There's no way that we can continue at any close to the level. So most fossil fuels needs to be gone, and as long you need to be clear about that as the CDR industry as well, and not just talk about emission reductions in general. Or you need to be clear on that, I think.
How do we crack this? I mean, this is such a difficult problem. Is we need 10%, the residual one, for a certain set of industries, but the 90% we need to eliminate very quickly. It's a very lucrative, very powerful, very controlling industry. Do you have any clue here, guidance or pointers, so that collectively we could accelerate that phasing out?
I mean, of course, the EU has a very clear plan there's a European emission trading system, and now it's also being expanded. Oh, yes. Like now all road traffic is coming in as well under the ETS in the ESR, for example. And it's all going to be needing allowances, basically. And those are going to be phased down to zero. And that forces out all emissions, or they wouldn't have to buy hopefully then permanent carbon removal for the last part, if that is introduced in the ETS. So that kind of policy where, with a cap and trade, I don't think carbon taxes cut it, because there's a lot of elasticity as well. So people might just pay more, right? And in Sweden, for example, where I'm from, gas prices are, I don't know, but at least double the US or something. People drive less, but they still drive. Their gas price, it's not like it's on its own just phases out, even though it's a really high carbon tax in Sweden. It doesn't on its own phase out. So that's a cap and trade, I think, is a good solution, and carbon take back obligation, another one. Similar.
Can I take a counter example to that? I mean, it's amazing that you bumping up the prices to sort of alter behaviors. The counter example to it is smoking in France, for example. I think it's in the world is the highest price per cigarette, and yet a third of people between 15 and 25 smoke, right? It's almost a cultural thing. It's entrenched in the culture, and it still seems cool. So there's really an aspect we need to push, through media, influencers, whoever, right? To point the finger as saying, this is the problem. Fossil fuel, big oil is the problem. They're slowing things down here. They're really not trying to accelerate things. And I don't know if the governments that are so intertwined, in the interest of fossil fuel are neutral enough to make a leap in new regulations. I'll give you an example. I've done a bit of research, and it looks like the subsidies to fossil fuel industry is still at the peak, right? It's sky high. We're subsidizing. When I say subsidizing, is not just with a hope of return on investment. It's straight subsidies. $13 million per minute, right? On fossil fuels, $4 trillion per year, and this is not slowing down. And you would be surprised who is actually subsidizing. Most of the countries like Sweden, France, they're pointing the finger at the biggest subsidizers. It feels like it's the chicken or the egg here.
That depends on what you mean with subsidies. And for example, Sweden has a really high tax on carbon tax that is mostly applied on fuels, fossil fuels like gasoline, diesel, etc. So it is heavily taxing them, and then air traffic is not taxed like jet fuel, but that's part of the Chicago Convention, and it's a huge international thing, right? So that's a subsidy, and then there's certain subsidies for agriculture use of diesel, etc. So like there are things like that. But yeah, I don't think taxes is enough. Yeah, as you say, like the elasticity is really high in France for smoking. So cap and trade is much better. If you say like, well, we're going to reduce the amount of cigarettes sold in France all the way to down to zero, then yeah, you have it's going to decrease. So it's not enough with the stick. You need to actually have something to select to, etc. To change to. But I think also all these companies, you can't speak of them as distinct from the state, because like the biggest fossil fuel companies are state owned, like Gazprom, Saudi Aramco, Petrobras, etc. Like there's so many, and in China as well, that are either state owned or like controlled, and it's not really private companies in the kind of traditional way.
And so, yeah, you're bringing out something very important, is to that care, to inspire, to lay out a vision that seems sexy, that seems appealing, is one way to do it. And I think the climate tech space is trying to do this, right? And it's succeeding. And what you're personally doing with CDR.fyi is one great way to do this. You're kind of collecting a bunch of data to show the trend and then sexifying the space, or at least showing it's going somewhere. Could you tell us a bit more about the CDR.fyi and maybe some of the results that you've derived from it?
So that's something that started as a simple data set, Google Sheet, tracking all the transactions in the carbon removal space. And now it's a website with a lot of people working on it. So I'm co-founder, but now it's a whole team. And just tracking all the pre-purchases and off-take agreements, and also deliveries of permanent carbon removal or very durable, so biochar and upwards. And it's still very early, but you see a lot of growth from very small levels. So there is a number of companies, like a few hundred, that have started buying carbon removal, and it's a small group of them have started buying kind of more significant levels. And most of them are kind of high profit, low emission companies, like in the banking, finance, software, etc., that could do it and could be expected to actually pay for the externalities that they cost, because they can afford it. They can afford to support these new technologies, whereas other sectors need to use the money internally to reduce emissions. They can't pay a lot of things outside. So that makes a lot of sense. So that's one of the things that you could see with CDR.fyi. But I think my main message is always that we need also more buyers to come in to start taking the responsibility. And there's plenty of companies that could afford to do something about their externalities and start supporting it.
And another way to sexify it is to turn that into a competition, right? So leveraging, and I think the XPrize carbon removal challenge is doing this phenomenally. So a bit of context, right? So Elon Musk has decided to fund and put in $100 million to the CDR project that would manage 1,000 tons per year, starting from next year, and then with a clear trajectory of reaching 1 million tons per year, I guess, in the next couple of years. What do you think of this? Is this just a PR stunt, or it's really boosting the space?
No, it's a great initiative, and hundreds of companies, thousands even, but hundreds of serious companies have applied, and it's been a great injection into the space, starting with 2 years ago. Now, I think that was quite important, like one of the really important early milestones for carbon removal, showing that there are entities that will support this at this early stage, that will help the technology development. So that's super important for people that are working in their garage or in their university lab and might not, have a lot of capabilities to take it further. And this becomes the 15 milestone awards, becomes super important for these companies that were awarded them to actually go to the next step. Yeah, similarly as off-take agreements and pre-purchases.
And in just a reality check, 1,000 tons a year next year, it doesn't seem that high from sort of a figure. How many projects do you think can realistically claim that today?
That have removed 1,000 tons?
Yeah, if any.
Well, it's mostly biochar projects, and then like Climeworks and Charm. And let's see, we can just go into CDR.fyi here and look at tons delivered. So yeah, on the first 10, there's 9 biochar and 1 bio oil, and then mostly biochar. So about 20 companies have done it. Mm-hmm. But yeah, we're at a very early stage, right? It's solar panels in the 70s, basically. We have Jimmy Carter putting up the solar panels now, and it's like, oh, cool, this is a new technology. Like, it might become something if we put some money into it.
So that takes me to, as an investor, to that next question: is this VC backable? if you're solar panel in the 70s and you know that it's going to take a couple of decades.
Has to go even faster than solar panel. Maybe it's in the 80s, solar panels, but still, Jimmy Carter probably put that out in, I don't know, 78, 79. Yeah, I think, is it VC backable or not? Are you going to get a quick return? Like, it depends on if you sell it to someone else, but it takes time to reach a mass market, of course, but we're going to need it. And some of these companies are going to have technologies that are much better than others and are much lower cost. And there's significant differences between different carbon removal companies. So there's definitely a great business case for those that have the best technologies, for sure. So some of those companies will do very well, and their investors will as well.
The power law and the hockey stick growth can definitely apply to CDR technology. Well, thanks so much, Robert. This has been great and super insightful to follow your journey. CDR.fyi, everyone will link everything in the show notes so you can get access to all this. And to all of you, as always, thanks for tuning in.
Thanks.